Morning traders, it's Friday, September 12th, your launch pad into the weekend and into what looks like a pivotal stretch leading into Monday. Inflation cooled a bit today, bond yields eased, and tech and healthcare are showing signs of more follow through. We're going to drill into overnight moves, macro pressure points, sector rotation, and then hit 3 trade setups you need to watch into the open and Monday. So let's get sharp and let's jump straight into it. So futures are trading mixed but with a lean towards strength. Here's our closing figures after Thursday. The S&P 500 rose 0.8% to 6,587 and 47 cents. The Dow also rose 1.4% to $46,108. The Nasdaq up 0.7% to $22,043.07. And the Russell also up 1.8% after flat yesterday to $2,421.53. So other than that, Asia closed in green across healthcare and growth tech. Europe's mixed, steady in defensives, commodity takedowns, oil is weaker on oversupply concerns, and gold is holding its ground near high levels, near its all-time high levels. So the dollar is slightly softer. All of this suggests Friday could open risk on, but beware of early inflation echoes, traders. Okay, now let's talk a little bit about macro pressure points and bond yields. So taking a look at this news article on Reuters that's been driving the news. So talking about inflation, data points loom. So while today's CPI or PPI numbers didn't land yet, the market is pricing in elevated odds that inflation won't roll over quickly. So sticky core inflation, especially services, remains a worry. Then talking about bond yields. After yesterday's spike, the 10-year fell back modestly. The curve slightly bull flattened. If we see more easing, risk assets, particularly growth in tech, will get a break. Then let's talk about oil. Looking at this headline on Reuters, oil slip is doing double duty, relieving some inflation pressure but hurting energy names. Keep your eye on supply reports and demand signals. Global demand softness, also a point we got to talk about today. So Europe and Asia both showing cautious consumer data. This could tighten the macro lens for exporters. What to watch? A soft inflation surprise tomorrow or lower yields again could spark a breakout in growth. Inflation upside risks could lead towards rotation into defensives or inflation hedges. Alright, now let's talk about sector rotation and pre-open themes. So healthcare and biotech first. Leadership is showing up here. Stocks with visible earnings or guidance will get premium. If XLV or big names open strong and hold VWAP, they might lead the open. Next, tech and AI. Expect continuation where quality meets momentum. Leaders that held recent support might run today, so keep an eye on that. And also, watch out for semis, cloud providers, and AI chip names. Then, talking about gold and precious metals. Gold's hold near highs is significant. Miners' hedging flows are alive. If risk sentiment sours, these become safe haven magnets. Alright, then onto consumer discretionary and real estate. With yields easing, home builders and retail can get re-rate trades if mortgage or borrowing costs seem poised to ease. So we got to be patient for that one to come through, but it is a good consideration. Lastly, energy and materials. Risky, but watch for tactical shorts. Risky, but watch for tactical shorts and overextended energy. If oil continues slipping, materials might be mixed. Some benefit if industrial demand picks up, others suffer amid inflation input costs. So a couple of things to keep an eye on today before the open. Now I'm going to give you a couple of trade scenarios to track. So for that, I'm going to jump into Trading View. So right off the bat, jumping into Nvidia, ticker symbol NVDA. So this is the growth or AI name that I've chosen to look at today. I'm gonna just hide these annotations that I used for one of our previous videos. So essentially, for one of these growth AI names, what we're looking for is a long trigger. So if it opens above today's futures high with good volume, early holding of VWAP, and a 1 to 5 minute trend, that's what we're going to be looking for. Then a risk trigger: if it fails VWAP or gaps weak, fade into weakness early, no need to hang around. Alright, the second trade we're looking for is a gold miner play. So I'm going to take a look at Alamos Gold, ticker symbol AGI. Let's give it a second just to load here. So you can take a look at Alamos Gold, ticker symbol AGI, or a equivalent of this. So a long trigger would be if gold futures lift at open, AGI holds pre-market highs. A fade or reduce if bullion dips sharply through support. No orphan longs if macro risk flows. So taking a look at gold itself, because we're trading near all-time highs, we've got to be cautious here and follow the trends. So always keep an eye on the graphs and what's happening in the news. But one thing is for sure right now, the banks are hedging. Alright, the last one we're going to take a look at, I'm not going to jump into a specific stock, but talking about real estate. So the context around real estate now is with yields easing, borrowing costs could loosen, and that makes real estate setups interesting. So a long trigger for any of these real estate stocks would be a builder name gapping or showing strength if home price or mortgage rate commentary is favorable. And then a fade trigger would be rate commentary or inflation surprises kill the open. Then we'll fade those names. So a bonus today: monitor macro surprise trades. If inflation or yield data beats badly or weakens, look for rotation into defensives like healthcare and utilities, and hedge via gold. Okay, execution notes and prepping for Monday. The first 30 minutes post open are key. Volume, VWAP, opening range, don't force, let structure present. Use tight stop losses, especially in tech and AI names. Then scaling, consider smaller initial size, add into strength. Save ammo, Monday might bring bigger moves once weekend events resolve. Okay, here's our closing vibe for today. So macro is asking for clarity, yields, inflation, and oil. Sectors are set up. Healthcare and tech are in focus. Gold and defensives ready if risk reappears. Setups, growth names that held support, gold miners, real estate, and rate sensitive plays. Now traders, closing notes: stay alert. Trade with structure and don't let Friday's volatility catch you unprepared. Let's finish the week strong and get early sightlines into Monday's moves. I'll give you a recap video over the weekend too, after the close on Friday, going into the open on Monday. So stick around to see that. And thank you for taking the time to join the video today. I hope you found it helpful. Remember to be cautious and patient when trading. Follow the graphs, follow the trends, and follow the news. Alright, take care, and I'll see you again after the bell.